Good day, everybody. It's Connor MacIvor, Connor with Honor, local agent here in Santa Clarita Valley. I'm bringing Trent Boser on the show. We're going to be talking about loans and lending. He's with Motto Mortgage, just a fantastic individual. He's here with me. We're going to talk about your market update. We're going to make this kind of a thing every week, every couple of weeks, talking about real estate in the market, loans and lending. How are you, Trent? How are you doing?
I'm doing well. Thank you very much, Connor. Thank you for having me on your show.
You're more than welcome. Give us a little bit of background about you, how long you've been in mortgage and your venture now, and just a few of those basic things people want to hear.
Okay. Yeah, so I started lending 27 years ago on a whim. I had a friend, Paul Christensen, who was starting a small business called Key Home Loans. And I owned a window washing company at the time, and I had all this Starbucks in Southern California. And I had routes going, I had employees, I had the whole thing going. And at the time, I Paul had he put a bug in my ear to get you a real estate license because back then you didn't need an NMLS, you just needed a real estate license. And so I grabbed my real estate license, and right when I got my real estate license, Starbucks decided to go with a national janitorial supply company to clean their windows. And so that went away real quick, and I stepped right into processing loans. So I didn't start as an originator; I started as a processor, and that really helped me get a grasp for what goes into the loan. So I think it was a great place to start, and I did that for about 4 months before I started originating, and from there it just took off. And I've been at multiple banks. I've been with Augusta, I've been with Wells Fargo, I've been with a lot of small brokerages, local here, and the biggest banks out there. And so I've got a pretty good grasp of each one and what it takes to originate, in different capacities.
Sure.
So it's been a journey. It's been 27 years of a journey, and right now I'm at Motto Mortgage Planning. Um, About a year and a half ago, the broker owner of the real estate company, Realty One Group that I sit in, that you're a part of.
Sure, sure.
Um, the broker owner decided that he wanted to start his own mortgage company, and so he bought into the Motto franchise. And so I've been helping him get that up and off the ground. And to date, we have 14 different lenders that we can go to, investors in our portfolio that we can go to, from the biggest ones to the smallest non-QM ones. So we've got PennyMac, Plaza, United Wholesale, Rocket, for our biggies, and then for non-QM, Plaza does non-QM, and then we all the way down to Loan Stream, the Loan Store. So we can do anything from FHA, conventional, VA, USDA, all the way down to your bank statement programs. So
So before we get into how you believe the market's going to evolve here in the next couple months, I know I'm going to put you on the spot. Let's back up real quick and talk about something that buyers that are considering purchasing real estate might want to look at in a lender. What are some of those big mistakes buyers make out there? And I have my own stories on the real estate front. Also, just real quick before you get into that, for anybody watching, if you have a real estate agent, I'm not doing this show to pick you up as mine. Stay loyal. Have a lender, fire them and go to Trent. But as far as I'm kidding, but be loyal to your folks out
that's
there. And if they're doing a good job for you, as Trent can attest to, it's not easy work, especially if you're good at it. If you're crappy at it, well, it's probably a piece of cake. But to be good is difficult because it's an everyday absorption of as much news and content as you can. So Trent, where do you see buyers making their first mistakes when they're buying their first house with regard to mortgage?
Okay, so I'd say the first biggest mistake that a lot of people make is they start looking for homes without knowing what their price point is, what they can actually afford. So
So when
that's
they're
one of
doing
the
that, so what happens with that is what maybe they're setting their goals too high, or they don't understand even the basic payment structure.
yeah, or they're just jumping in and they're seeing something and they're going, "Hey, I want to buy this house," but they don't understand what the payment's going to look like and what the taxes and what, HOAs or Mello-Roos or all the things that go into that payment that are going to cap them. So, your buying power is based on your debt to income ratio.
Okay.
So they look at what your monthly debt is, and they add that mortgage in with your car payments, credit cards, things, anything that shows on your TRW, your credit report. and they divide that into your monthly income, and that gives you your DTI, your debt to income ratio.
Okay.
And with lending, you're capped. You can only borrow, max 50%, give or take a little bit of your monthly income for all of your monthly debts. So
What's
they'll
what's
jump in. Hmm?
what's that look like when you're, let's say you make 100 grand a year, and let's say you don't have any debts. I don't even know if that's possible. So
Okay.
then that equates to $50,000, or how does it look like?
Yes. So that's basically what you would do is you would look at, okay, so $100,000 a year is what monthly? Nine thousand a month, right?
Correct.
Later, 82, right? So to do the math in your head, you would just go, okay, so they can qualify for approximately $4,000 a month in monthly debts.
Ah,
That's how I do the math quickly in my head,
okay.
right?
Now you're
So
putting on top of that. So that's a super clean borrower, which probably there's some debt in there. So continue, please.
yeah, so most people have debt. They have car payments, things like that. And so you have to, and it's not as cut and dry as that, where you just go, oh, okay, this is how much they make, and if we divide that in half, and this is the max they can go, because you are going to have car payments, you are going to have credit cards, and then when you're talking about the different types of employment, it'll change the whole structure. Because let's say we have a self-employed borrower, and they have an S corp, and they write off the company covers their car payments. So all of a sudden you're looking at the credit report and you're like, oh my gosh, they have $1,100 a month Mercedes. Well, then you go on to their tax returns, and then you can see what they're writing off and if any of those are covered. So then you can back those out. So it's not as simple and cut and dry. Because if I'm talking to a self-employed borrower and they're like, well, yeah, I've got this car payment and I've got this car payment, we've got 3 company trucks and da da da, and that's this, we make this. I can't use that. I can't just do a basic deduction and figure out. I have to dive deep. So that's another thing about having a good lender is, are they going to dive deep, or are they just going to scratch the surface and go, oh yeah, you can only qualify for $300,000 because you've got $4,000 in debt with cars. Well, all of those are erased because the company pays for them.
So that's good advice when you're going to a lender, if they're doing just a very basic preliminary run because maybe they're too busy or they don't want to spend the time, and all of a sudden they give you a number and then you go out there, it's bad because maybe it doesn't match up. Besides the borrower stuff, Trent, is there something you were mentioning? HOA, Mello-Roos, all of these impact. If you see a house for sale at 800 grand, that might be well and fine, but there's also other costs that get calculated in. What are people looking at on that end?
Okay, so in Santa Clarita, as you know, there's a lot of builders out here who pass down the cost to build the infrastructure.
Okay.
So your paseos, your schools, your fire stations, all the infrastructure that goes into building a community, right? So they had the option at the time of building to say, okay, we're going to cover these costs to do this infrastructure, or we're not going to cover the cost and we're going to hand it down to the consumer or the client who's purchasing this home in the form of an assessment, right? What they call a Mello-Roo. So in those Mello-Roos, you're covering your firehouses, your schools, your paseos, walkways, everything that they have to put in. And you may get that house for a little bit cheaper because you're having to cover this, but problem is you could take your effective tax rate from, the standard out here is 1 1/8, 1 1/4%. It could
Right.
take you all the way up to
Of the home's value, 1.25% basically of the home's value, right?
correct.
So if
Correct.
it's $1 million house, that's $12,500 a year in taxes, approximately, right?
Correct.
Boy, that was hard. So from there, it just goes up with Mello-Roos. That seems like criminal. Why wouldn't the builder pay that themselves? That doesn't seem right.
Yeah, well, I mean, at the time, it depends on the market. If the market's booming and everything's going great
They'll
and
pay
they're
it.
selling
Right.
they're selling houses left and right, they don't care.
Yeah.
Right? It's not, and if it's a little slow, there's a little lull in the market, they might discount that house $100,000 or $50,000 because they know they're passing this Mello-Roo along to the consumer. So they'll go, oh, okay, we'll attract them by offering a lower price on the house. But then they add the Mello-Roos, and people at that point, they don't care. They're in, they found the house they love, and they're just like, oh my gosh, this is the one. And then, the husband's got to talk the wife out of it because there's a 2% now effective tax rate because of the Mello-Roos and special assessments.
And then let's talk about this. That also can go on for 20,
20,
30 years.
20, 30 years. Yep.
And then
Yep.
at the end of that, is there really a for sure, is there some kind of mechanism that says absolutely it's finished at that time? From what I understand, it can be continued for who knows what reason, but it can be, right?
It can, yeah. So they can, so those bonds don't always end at the end of that 20 or 30-year term. If there's other infrastructure that's put in that's added to it, it can
Ah,
extend out the term.
clever. I didn't
Yep.
know.
So, but there's places, I mean, we're seeing them drop off. There's some markets in Stevenson's Ranch where um, at the beginning of
There's
next year, we're going to see the actual assessments drop off. So, and it's rare, but it does happen.
Yeah, thank you. So let's talk about homeowners association. Those fees, I've seen some of the new housing, $1,000 a month. Are they
Yeah.
serious? I don't even know what that means.
Okay, so there is a valid reason for it happening,
Okay.
even though it's atrocious. Um, we're with what's happening in Southern California with the fire
What
down all of
fires?
California, I guess.
Just kidding.
Right? Right. Altadena's wiped off the planet. Palisades wiped off the planet
Yeah.
because of fires, and it's not just those fires. It started several years ago with the wildfires that burned up north and took out all tons of communities. And it's tragic, but
Right.
then it's moved south. When that happened, a lot of insurance companies fled the state. They're like, we're not insuring in California anymore. And then if you did have fire insurance, you were getting dropped if you were in a fire zone. And then they remapped the fire zones, and pretty much all of Santa Clarita is now in a fire zone. So what we're seeing is the HOAs are now um, having to get fire insurance anywhere they can, and the premiums are atrocious. And so that has to be paid by the homeowners. And so they divide it up between however many homeowners they have that are paying into the homeowners association, and your bill goes up.
Boy, what a great question to ask before you get into escrow on a property.
Yes.
Not that anybody has gotten any mailings, but that would be the most important step to talk to that HOA and find out, do they have any chances of them increasing in cost? What about the new housing though? Is that the same deal where they're slapping on $1,000 or 1,200? That's because of fire, is it?
Yep. Typically,
Oh,
yes.
yeah.
Typically, yes. Some of the like 5 points, they have really nice rec areas and gyms and things like that,
Wow.
which you're
$1,000 a
paying.
month, I bet.
But you're paying, yeah, you're paying into that, but you're also paying into the higher cost of coverage. That is the main reason. And we're not typically blindsided by that because we have several condominium complexes in Santa Clarita that are unwarrantable. And
Yeah.
unwarrantable meaning you
And you
cannot
buy
find.
those cash only kind of thing?
No, we
Oh,
have we have like First National Bank of America will finance those
okay.
20% down,
Oh,
but that's the caveat. You've got a $600,000 condo, and they're like, oh my gosh, this is a beautiful condo. It's newer, and we want to get into that. The Tesoro area has all those beautiful condos, and they're all unwarrantable because of the cost of the fire. And the reason they're unwarrantable is because they haven't passed down the full cost of that insurance, because it would be undoable for most people in that HOA.
okay.
So, if you have a $300 a month HOA, which is what it is now, and then all of a sudden it goes to $1,200 a month because they had to get a $40 million fire policy, well, there you go. So it makes it unwarrantable, non-warrantable condo, meaning that um, the insurance is lacking. It's underinsured. So, and the other another problem, and a way they could fix it is they could segregate the HOAs and only cover individual parts of that HOA. But the
Oh,
problem is the HOA encompasses large areas. So there's PUDs that are surrounding the condos that
HUD
are
meaning,
planned unit development,
right.
or single families that are in a PUD. So it's even though it's a freestanding home, it may share like a lot line or something like
Oh,
that.
a wall, like that's a zero lot line, right? Where you have
Zero
a
lot line.
property with the, oh yeah, okay, got it.
So
That's good.
yeah, so those are, and the HOAs will cover like a whole area like that. And to cover that whole area with one fire policy, it's difficult because if one of those homes burns down, okay, that's not very much to replace. But if a condominium unit burns down, that's much more expensive to replace. So what they should do, to remedy it, is they should segregate the HOA and the individual complexes inside that HOA and create different HOAs for each one and pull an individual policy for each one. And it'll be a lot cheaper.
That's good to know. Hopefully they're listening and watching. I wanted to talk about on the buyer's end of it after they go through with a lender. A lot of times, everybody has a friend or a relative, and this happens to me in real estate all the time. They told them about the big one that they caught and that fantastic house they bought and how they bought it for zero money and it was this and that. So they give them the story, and then all of a sudden they say, well, I'm going to reach out. I'm going to see if they're any different. With the lending world, how do people know that they're getting a good deal? The best deal, everybody's going to lie to you and say, oh, I have a better deal. This is why when it comes to the closing table, they're going to screw you over. But is there some document or something people can ask for that so they can kind of see where your fees are versus somebody else's?
Yeah, I mean, you can always ask for an estimate, a loan estimate, and you want to look at the APR. So your
APR stands for?
annual percentage rate.
Okay, okay.
So your APR is going to be your interest rate plus your fees divided into a 12-month period. And it's a shopping tool. The reason they created an APR is so that you could shop. So, you know, when you're looking at me versus Wells Fargo, you know, Wells Fargo could have a really great rate, but all of a sudden, to get that rate, you're paying 2 points. Well, that 2 points is going to reflect in your APR. And then you're going to see that your APR, instead of being 6.25, is now 6.875, whereas my APR is 6.5 because I'm not charging the 2 points.
Ah,
So that's a good shopping tool.
okay.
Um, people do on the broker side do manipulate those numbers sometimes. Um, if you want to be safe, I say don't travel out into the worldwide internet and look for someone in Ohio to do your loan, because there's a lot to be said about being able to walk into someone's office, sit down in front of them and say, "Hey, what does this mean? Are you charging me this? Is this like, are you really charging me 3 points?" Like, I would be mortified if I did that and someone walked into my office and
Yeah.
and said that. So,
And
um,
also from the agent standpoint for the people, it's difficult to communicate, especially when we're getting close to closing and I need stuff. I need things to be done. And, they're 9 to 5, Monday through Friday, weekends and holidays off. If it's 5:01 p.m.
they're
and
gone.
Eastern Standard Time, and I'm done. Yeah, there's no
Right?
way. And for a lender, I don't know how many, I know how many times I've sent clients to you at 8 or 9 o'clock at night to get an answer because I mean, I've been showing properties all day long, and they need to write that offer, and this property might be beyond that pre-approval letter that we have. And they're exploring it. Not that I ever push anybody to go higher, but they need the answer and whether they can afford 5,000 more. And you're there to answer the phone.
Yes. Yes. And that's another benefit of having a broker. I do
Yeah.
know some people that work at banks that will answer their phone, off hours, but they're not supposed to.
Ah,
They have rules against that. But yeah, I mean, that weekends and evenings are when we do the most of the majority of our lead gen, if that's the right word, and customer service. During the day, we're pushing the paper and dealing with the banks that we've sent the loan to make sure that it's going through. So all day long we're cracking the whip at the bank, and then in the evenings, that's when we're doing applications, and that's when we're talking to clients because that's when most of them are available, or they're
sure.
out looking at homes with you. You know, so
Tell
yeah,
me
it's important.
Tell me about what you think the future of loans and lending is going to be, especially I know you can't quote interest rates, but I'll tell you what, this I don't know what's going to happen in the world as far as the government goes. You know that I always climb down that AI rabbit hole, and I think we're all going to be wiped off the planet in a few months anyway. But
Right.
until we get to that point, tell me a little bit about where you think the Fed might be going with the rates, and if a rate drop would be appropriate without, sinking your own ship. What do you think?
Okay. Well, I mean, there is a plan in place.
Okay.
And if you're in the know at all, if you pay attention at all, you know that um, Trump has a plan to force the Fed's hand to lower the Fed funds rate. So keep in mind that him lowering the Fed funds rate isn't a direct correlation to interest rates for mortgage. So when
And why
they,
is that, Trent?
well,
Tell the
with
audience how that works, that 10-year thing.
well, so the Fed funds rate it's more directly correlated to consumer loans, autos, motorhomes, credit cards, things like that. But when they force the Fed funds rate down, and those other subsidies come down, then it trickles down to mortgage.
Ah,
So yeah, and so
oh,
when there's more money in the bonds, when people are investing in the bond market and instead of stock market,
right.
more money going into bonds correlates to lower interest rates.
Okay, makes sense.
So, it's pushing an agenda for sure, and we're going to see the Fed rates, the Fed funds rate, which again, when everything else is lower, then people have more money freed up. There's more investing going on. There's more money in the bonds, and therefore interest rates come down.
I think that would put this market back looking like it's 2021 and 22 with such a high buyer drive. I mean, there's like people waiting. I don't know how many. I'm sure you got a long list as well. Even though we try to tell them, don't marry the rate. When it
Right.
comes
Right.
down, you're so early into just financing a house. If you buy it today, that rate
Mhm.
comes down, you can refinance it probably at near to nothing, I would guess.
Yeah. So
Right?
forever home, not your forever loan.
Uh-huh.
Uh,
Oh yeah,
average
for
loan, average loan lasts 4 years. Historically, the average loan only lasts 4 years. We're seeing an anomaly right now with people keeping their 3.25% interest rates because nobody wants to give that up. And there's people out in the market, there's people like me that believe that when they do force the feds down and the interest rates do come down because of that, that we're going to have a market crash.
oh,
There are people that believe that because what they're saying is, oh, all these people are sitting on these homes waiting for interest rates to come down because they don't want to give up their low interest rate and they're waiting for them to come down so they can buy up. But what those people aren't realizing is, and of course they're saying, oh, well, then there's going to be a flood of homes to the market.
sure.
Well, those flood of homes to the market aren't people that are going to be leaving the state. The flood of homes that are coming to the market are going to be people that are remaining in the state. They've been waiting and holding off to buy up. They've had more children. They want an RV. They want a pool, whatever it is, whatever they are looking for that they've been waiting for the interest rates to come down to sell their current home. Those people are going to turn around and buy another home. So, how in the world could there possibly be this crash that some people are saying? So to me, it's nonsense. And what we are going to see is we are going to see a flood of homes to the market. There are those people that have 3% interest rates or 4% interest rates are going to jump back into the market when it hits 5% because they can bridge that gap, right? And they can move up. And and they're going to buy those other homes because the 1.2s, they're going to be buying 1.8s and the 900s are going to be buying the 1.2s. So the people that were going to leave the state, I feel, fled the state already and have gone.
Yeah.
So,
I
and that's
see.
what our market's been.
Yeah, I think that's going to be very true. I know that a lot of the agents from other states, they have these podcasts and the news reports they put out, and they very much talk about the California market, but they're talking about rural areas. They're not talking about cities that are around major areas of influence like Los Angeles. Santa Clarita. We have our own infrastructure here, but we're very close to LA, so there is a lot of LA people that live out here and call it home because it is so close. I mean, what Foothill? Well, Balboa going down, that's the northern border of Los Angeles City. I remember as a
Correct.
motor cop, we would go as far as we could to ring off, so we were still in the city, but could get home in 10 minutes. So that was cheating, but that's how it used to work back in the day.
Well,
But yeah,
that's
no,
smart.
that's yeah, it's interesting. There's so much going on in the political world. Whether you like Trump or hate Trump, it seems like everything's going well in the economy. And
Mhm.
I think that interest rate, if they were to fix that, it's going to kick off a lot of home buyers. I still think people, even though they're sitting on a low mortgage, I think a lot of those are probably going to rent those out. Do you think?
Um, it just depends on if they have the equity position to rent them out because to move up,
Oh, yeah, you would have to afford that whole. Yeah, that's
to,
right.
yeah, to move up, even if you're at a 4% or 4.5% interest rate to buy a 1.2, $1.3 million home, you will see people renting out the condos. So the first time home buyers that got in, 5 years ago
Right.
into a condo and right before the boom, right? The boom that we saw, and they got their condo cheap or their little single family residence really cheap. Those people, if they've been saving their money, will probably or they'll pull equity out to move up and they'll keep it as a rental. You will see that, but I don't think it'll be the majority because
Yeah.
the cost of living in California is so high. It's difficult for a lot of people to do that.
Mechanically, how does that work when somebody comes to you and they have a house that they want to rent out? I mean, I know there's the VA might be a little bit more friendly to that, but let's just talk about a normal Joe and Jane that come and they have a house that they want to rent out and they want to come buy something else. What do they have to go through?
Well, I mean, they would have to go through a pre-approval process with me. But are you asking specifically for the rental side?
Yeah, so let's say they want to rent the home out, but they want to buy something else and they don't have it rented. They live there. That's their primary residence. They would have to qualify for that. And then also an entire other one, potential rental income. Is that factored in
We
at
can
all? Or
Yes, of course. Yeah. So
oh,
if they are going to turn their primary to a rental and they're going to
okay,
move up and have a new primary residence, if we have a rental agreement, so we have a legitimate lease agreement and a first month and deposit check,
okay.
we can use 75% of that rental income,
Oh,
even if they don't have any rental history. 75%. Yeah, it's called an occupancy. 75%
oh,
occupancy. So we can use 75% of that rent to offset their mortgage payment. So again, if they got in before the boom, and let's say they've got, $500,000 condo and they only owe 300 on it, we could pull 100 out for them to help with down payment on something new and get probably $3,500 a month in rent because rents are high,
yeah, right.
and it would easily offset their payment on their current existing mortgage they have on that condo or that single family, and then they wouldn't have to qualify with that debt.
Oh, that's good to know. I thought that was only exclusive for VA borrowers, people that were veterans. So that works
Nope.
in the conventional world too.
It does. Yeah. And if
Yeah,
they don't have rental experience, then you can there's caveats to each thing, guidelines for every different establishment, whether it's Fannie, Freddie, Ginnie, the different establishments have different guidelines for that. Some of them say, okay, we can't use any of it as income, but we can use it to offset the payment.
sure.
And that's how a lot of them are. It's because you don't have rental history, you're not an investor. Then but we'll still give you 75% if that 75% can be used to cover the mortgage payment. PITI.
And the
Yep.
PITA is property mortgage interest and taxes and insurance.
Principal, interest, tax, and insurance.
Very
PITI.
awesome. Just everybody listening wants to know. So let me ask you this in closing. As far as borrowers right now, what's your best advice for them besides, making sure you get pre-approved before you go out there and start looking at properties? What should they cinch up on their side? What should they be thinking about providing you as far as documents to get a loan?
Okay, so depending on, of course, how they're paid is going to
Okay,
determine which documents we're going to need. If you've got a self-employed borrower, it's much more intensive, and we're going to need a lot more documentation. If you're a standard W-2 employee, salaried, hourly, whatever, Super easy. W-2s, current pay stubs, bank statements to verify that we have the assets to put down. And then from there, we'll gather all the other information based on the property, whether there's HOAs, things like that. Um, if you're self-employed, then of course we're going to want to see 2 years tax returns. If you have an S or if you have an LLC, and we're going to need both the business returns and the personal returns, K1s, so that we can see what the distributions are. So it gets a little more extensive when we start looking at self-employed borrowers. But yeah, I mean, if you're just plain Jane, just those few documents will get you going. So, and then we do the application. We look at all the different things. How long have you been employed? How long at this job? Oh, do you receive bonus? Okay, if you receive bonus, then we're going to need last year's year-end pay stub so we can see the bonus on there, so that we can compare it to this year's bonuses that you've received to make sure you're still in line to receive those bonuses, things like that. So it gets pretty detailed when you have different factors. But those are the things that a good loan officer is going to pick up on up front. They're going to, through their initial consultation, they're going to ask the pertinent questions that will help them set up the file properly.
You've definitely helped people out today. I know that there's a particular edge when you're working with somebody that knows their craft, been in the business a long time. I understand there's people new in the world and they should always be given a chance, but it's so much better when you're dealing with somebody that's accountable, local, somebody you can, just like you said, it's so powerful. Somebody does you wrong. I mean, to try to get back to Ohio to deal with them is very expensive. But if they're out here, you're going to get the same rate, if not better, same cost, if not better. If people are teasing you with stuff online, and as Trent said, you can go online and find all sorts of stuff.
Yeah.
It's not true. You want to get it in writing. You want to verify anything that Trent tells you or I tell you, any other lender or realtor tell you. If it sounds too good, follow it up with an email. Say, Connor, we were talking today, and you mentioned that you were going to give me the house for free, and you were going to work for me for 3 years as a slave, whatever. Again, that has to be verified in writing. But Trent, in closing, so what are you doing today lately? You working out? What are you doing? You're looking great.
Yeah, I hit the gym. I usually go on my lunch hour or immediately after work before, like, I'll drop my kid off at soccer practice and I'll go straight to the gym. And if that's not the plan, then I'll do it at lunch. Just go hit it for an hour. I mean, it's all you really need
Yeah.
to really get your physique is 45 minutes to an hour, and you just go and hammer it out. And me, with the limited time I have, that's what I do. I go and I hammer it out as hard as I can, get as much in that 45 minutes, and you know
Ah, there you go. Very nice.
pays off.
you know
Pays off.
people just that's this soul carrier, our body. It's the most important thing, and it's so easy to neglect, and it's so easy to get in that rut. I remember when I was the fattest I ever was at 365 pounds, just I would autopilot myself into Jack in the Box and buy 14 tacos and two large french fries and two shakes, and I would
Right.
hide in the parking lot. And you know what was funny? I was doing a podcast this morning talking about that event, and I remember I would go try to hide somewhere and devour all this food so nobody would see me. And after you burn your mouth several times because the tacos are so hot, but you're in such a hurry, you look around and there's other people that are
Doing
just
it.
as fat
Right.
doing the same thing. So now, I've been able to get rid of that habit. But now when I go by fast food restaurants, I'm always looking in the parking lot to see, who's out there scarfing it down before they get home. And it's a whole ritual. But no, good for you taking care of yourself. That's a big deal. And muscle is so valuable. People, it's still a very addictive world. So much crap out there, misinformation, and good for you.
You know what? And on that, it's the same paradigm. You're going there, that's your routine, and you're eating your tacos, and that's your routine, and that's how you get to where you are. You just shift the paradigm to, this is my new routine, this is what I want, and you get into that habit instead of the other habit. And it's really, really difficult. I still fall off the wagon. You know, I'll still eat chocolate,
Yeah.
and last night I had like 3 or 4 bites of a Snickers because you have to give yourself a little bit of something that you love. But if you can get yourself into the habit of going, then it becomes a new addiction.
Yeah, see that works for you. Whenever I give myself a little bit of something I love, I don't stop at 3 bites. I'm buying an entire case of Snicker bars, seriously, or two large pizzas, or but I don't have a
Right,
stop mechanism. So because I'm so addicted so easily to things, for me it's abstinence. Or if I do go out there and I do blow it out, I have to remember to not keep that trend going for the next 3 or 4 weeks. I
right.
have to. So that forgiveness, that was something that was the variable that really changed it. Whenever I started fasting for longer periods of time and I screwed up,
You
forgiving
can forgive
myself and
yourself.
immediately stopping,
Yeah.
even some of the drive-throughs, I threw trash, I threw uneaten food away, all of it. I would pay $20, right, for all these tacos, all this crap. 25 bucks, I would get through, and I had a moment of clarity and I threw it away. It was so irritating. That was, you almost want to hold on to it and just eat it just because you spent the money. But those were like
Mhm.
the biggest wins for me when I was
Yeah.
actually able to throw away uneaten food when I finally had a moment of reason creep in. But no,
Well,
you're 100% right. But me, I'm not good at moderating.
I think the best takeaway from that, what you just said, is forgiving yourself. Because that if you can't forgive yourself for screwing up, for making little mistakes, you'll never get where you want to be ever in life with whatever it is. You have to be able to forgive yourself, and you have to realize I'm fallible, I'm human, this is human nature. I'm going to make mistakes. I'm going to screw up. I'm going to, lose my motivation. I'm going to go through emotional ups and downs. You got to be able to forgive yourself, and you got to be able to just go, okay, all right, that happened. Let's get back to it. Let's just get back to it. Put your head down, put your big boy pants on, and get back to it. All you can do in life, and I went through, as you know, with my story, I went through several years that were very, very, very difficult. And that was my realization after, 2 or 3 years of destroying myself just so I could sleep at night, was all right, there's no way around this. There is no alternative. You can't take yourself out because that's not an option. And so what do? You get up in the morning and you put one foot in front of the other, you put your big boy pants on, and you kick ass. You got to put a smile on, fake it till you make it, fake it till you're past it, whatever, right?
Or
That's
have a closet you can go in and shut the door and just let it all
it's
out. And
free.
then go wash your face. Like Dad used to say when he was trying to teach math. Get up, go wash your face, quit crying. Get back here. Oh my God, so many great lessons. But no, you're 100% right. People really don't give themselves enough credit.
They
And
don't.
people don't realize how much power they really have because they're told all the time they don't. And it's hard. And yes, it's hard, but you're capable. You're
Right.
capable of everything that's hard. And it's going to suck. But you have to look at where you are. Is a little bit of suck better than continuing on the path? And maybe you're good with it. Maybe I sucked being fat. I was fat forever. It was horrible. And I was
Yeah.
no good at it. Some people I met, Trent, they were just you
Just
just,
happy.
well, on the outside at least. I don't know what they were doing behind closed doors, how much they cried themselves to sleep at night. But in front of you, my God, they were so comfortable. They didn't care. They wore the clothes and they were just very proud of that. And good for them. I sucked at it, but it took me 50 something years to find the way.
Right.
And that's once you find it, it's like going through a long period of depression. It's hard to crawl out of that. But there comes a time either you die or you realize I got to change this. And you said something really valuable before as we were talking about loans. It's that process. It's taking this kind of a lifestyle that you're stuck in and then slowly changing those habits. The habit of it was like an autopilot habit of going through the drive-through, changing that to something else. So you know what? I'm not going to do that. I'm going to do something else. I'm going to modify it. With me, it was just quit eating for long periods of time, realizing that you know what? I actually didn't need to eat as long as I had the fat to burn. There it
Right.
is. But we're told, oh, it's going to slow your metabolism. And then studies show it increases your metabolism by 10% when you don't eat. You caloric restrict, you lower your metabolism because your body adjusts. But again, more lies by the world. So we
Yep.
can buy that addictive food. You know, most of the food manufacturers, the big companies, are tobacco owned. The tobacco
Oh,
companies bought them out.
really?
Yeah, it went from, remember the lawsuits back in the day with the smoking, them
Oh,
saying
yeah.
it wasn't addictive. So the scientists were making them addictive on purpose. Whenever tobacco got those big lawsuits, they ended up, big tobacco bought a lot of the food companies, the big conglomerates. They still own them. Do that research. It's amazing.
Oh
So those
no.
same scientists now are making those foods incredibly addictive. And it's tough. Alcohol was hard to quit. Tobacco, smoking, you know, I had a great run at that too. It sucked. Chewing tobacco was really difficult. But
Very
I'm a good quitter. I couldn't, people ask me the question, you know, why this time? Why did it work this time? I don't know. I don't know why. I guess
difficult.
maybe I just got fed up of being overfed. I don't know why it worked out, and I try to put I wish I could. That would be a billion dollar
The
venture
answer.
if I could figure
Yeah.
out why it worked this time and it didn't work all the other times I tried.
Yeah. I want to know too.
Yeah,
I'm still trying to figure it out, like what changed.
yeah,
Because I've gone up and down my weight. I was 201 at one point. You knew me when I was 201.
yeah.
And what changed? I saw a
I'm not
picture
going
of
to tell you what all the people called you behind your back. I won't do that because
please
it's not
don't.
nice. It's not. People can be mean. Kidding.
Yeah, yeah. Well, one of those nice people sent me a picture of myself surfing behind a boat, and
Oh,
that's all it took. And I was like,
yeah. It's
that's what
those
I look.
little, yes. Is
I'm
that
like, I got to
me?
do something. I gotta stop. I gotta do something. And then, of course, you were a huge proponent in my weight loss and my getting into shape because I saw you and you motivated me, and I was just like, What are you doing? How are you doing it? Help me." And you did. You gave me pointers. Do this. Do these supplements. This is what you can and can't do. This is what you shouldn't do. And and the fasting was huge. I still fast. I still intermittent fast. I've never done a 14-day fast like you did, but yeah, fasting really works. Speeds up your metabolism, clears your head. I feel amazing when I do a 2-day fast. So yeah, those things. But I think more so, it's just that mind shift. You can do anything that you put your mind to, and it is true. You may fail 1,000 times. You're like, oh, that's not true. You can't do anything you put your mind to. But if you keep doing it, you will succeed at it.
That's
It's
right.
the people that give up that never win.
Yeah. What is it? What's that book? How to, I don't know what book it was, Napoleon Hill maybe, when the guy stopped 3 feet from gold. He was digging, he was a miner, bought this big mine. He was digging and digging and digging, and he expended everything he had. Finally, he just gave up, closed the mine. Somebody went in and bought it, and 3 feet later, they hit one of the biggest
Oh my
um,
God.
gold things in the world. I forgot what book that was, but
I don't know, but I'm gonna have to read it.
yeah, no, maybe a Napoleon Hill book, but yeah, people often stop right before that breakthrough. And you know, what do they say? Going to work for 8 hours a day, 40 hours a week, only to end up dying after retirement. That is the definition of insanity. They
Vanity.
say, you know, when
Mhm.
you're fat and you keep trying these different things you still have no result, I say keep trying. Because
Yeah.
eventually it's either going to kill you or it's going to work.
Yeah. It's gonna kill
Like,
you or set you free. One or the other. Yeah, I agree 100%. Got to keep trying.
yeah,
Keep
yeah,
trying.
that's a big part of life. I think once we sit and accept the things that we don't like, that's the beginning of the end, I think.
Yeah. And the forgiveness again, biggest part. Like in
Yeah, that's
even
right.
in whether it's, smoking cigarettes or it's weight loss or it's
God,
your
it sounds so
job.
girlish though, doesn't it? I even hate to say it when I'm talking. You got to forgive yourself. What do you grow up? But
Yeah, yeah, no, But it's true. People we are our own worst critics. We are harder on ourselves than anybody
Oh,
else is on us. And
nobody gives a crap. Nobody's even
right,
paying attention.
it's us. It's
That's
just
right.
us. We're the ones that kick our own butts. So yeah, it's definitely forgiveness. My brother texted me yesterday and out of the blue, he's like, "Hey, I'm sorry I worried everyone." I didn't know what he was talking about. I'm like, "What the hell are you talking about, bro?" And he's like,
Yeah.
"Oh yeah, Sandy was worried about me because she couldn't get a hold of me because I wasn't taking her calls. That's his ex-wife." And I'm like, "Well, hopefully you had a good time, whatever you were doing." And he
Yeah.
goes, I went to places that I knew dad loved, and I went there to forgive him."
Oh,
I know. Look at me. I'm like, I got
oh,
the goosies. I'm
great.
tearing up. And
Yeah.
I'm like, wow, okay. And I want to dive deeper with my brother. He couldn't yesterday, but I want to know like what kind of spiritual journey is my brother on right now
Yeah.
that he's healing, he's forgiving himself and he's forgiving my dad for, probably not being the father that he should have. But good for him, and forgiveness is such a huge part of life and you're not gonna be able to really thrive, I don't think, in life if you don't find some way to forgive yourself.
Yeah, that's that. Yeah, you can't, and you can't, it just goes back to that whole thing. You can't expect to give somebody your best when you're not giving yourself your best. You can't
Yeah,
expect to have somebody in your world that you can really adore and love if you're not adoring and loving yourself. It's God, it
amen.
just sounds so
It's
weak. So, ugh.
so weak.
But yeah, it's
God
so true.
damn, Connor.
God,
Yeah, stop doing that.
this has been Therapy with Trent, ladies and gentlemen, and we
Thank you.
appreciate you
Come back.
listening.
Stay tuned. There's more to
Yeah.
come.
So next time we meet, maybe in a week or two, I'll put this out there. Maybe we'll start doing some live shows, but I would love to also talk about artificial intelligence and the way it's going to end everybody. So that would be a fun
Oh,
show to bring up. If we're
wow.
still here a couple weeks from now, we should do
Make sure
that.
you forgive yourself before the end.
Yeah. Oh, you know what? That's a good book. I'm going to work on that. Anyway, brother, I
Start it
appreciate
now.
it. So where can people give me some digits where people can reach out to you?
Yeah, my cell phone is the best way to contact me. You can call me or text me at 661-733-1357.
Awesome. 661-733-1357. And that's
Yes, sir.
Trent, ladies and gentlemen, with Model Mortgage Planning here in Santa Clarita, Valencia, California. Does have a local office there on Avenue Stanford over there in I guess, the Bridgeport industrial area. And great office. My office is there as well. And I know Patrick, the broker owner of all things, is a wonderful individual also. So I appreciate the opportunity he's given both Trent and I, and I'm sure Trent mirrors that as well.
Yes, sir. Yes,
You
sir.
have a fantastic day. Thank you so much for coming on, and we will see you in the next one.
Thank you. All right. Thanks, Connor.
Take care, brother. Be well.
Take care.